Zillow is facing staggering losses here in the fall of 2021. Its stock price is down by over 50% year to date. It's laying off 25% of its workforce, and now it's no longer buying and selling homes in America. This is something that's come as a big shock to the real estate world, to the stock market, because only a couple months ago, Zillow was viewed as one of the kings of what's called iBuying, when big real estate tech companies come in, buy and sell homes and try to flip them for a profit. Who could have seen this coming? Who could have seen this coming? Zillow's massive decline in stock price, the big layoffs. I'll tell you who. I saw this coming. Only 6 weeks ago on this channel, I put out a video informing people how they can profit off the housing market crash. In that video, I talked about how bad I thought Zillow's business model was of buying and selling homes, and I advised and informed people that if they want to bet against the housing market and bet against Zillow, they should buy put options on Zillow stock, which is basically betting in a decline in stock price. That video came out on September 24th. Since then, Zillow stock price has gone down by 35%. Anyone who bought put options back then has tripled their money. I know I did on my put options. I'll show you in this video just how much money I made betting against Zillow. So what I'm gonna do in this video, as the one who saw this Zillow crash coming before anyone else, I'm gonna, number one, tell you guys how I saw it coming. How did I know that Zillow was gonna go crashing down? And number two, from what we learned from Zillow's crash, what can we then predict about the next crash? What's the next company that's gonna go down in flames? Because let me tell you folks, there's a real estate company out there that I think is even more overvalued right now than Zillow was a couple months ago. Maybe that would be a good one to bet against today. Without further ado, let's get into the data, folks. If we take a look at this chart, we can see Zillow's stock price has gone down by a massive 51% year to date. 51%. Back in early 2021, their stock was trading around $140 a share, and today it's trading at $66 a share. The big fall off has occurred just in the last week or two. Now, if you're someone who owns Zillow stock over the last couple of weeks, you're not a happy camper right now because your holdings took a massive, massive hit. However, if you're someone who watched this channel and watched my video 6 weeks ago, you might have been someone who bought put options on Zillow's stock. And so if you believe that we're going to have a housing crash and that Zillow's stock price is going to go down with that housing crash, which is something that I believe, here's how you could potentially make money off that. You would buy a put option on Zillow, ticker symbol ZG. Their stock price today is $94.28. Say that in 9 months, you believe there will be a 30% decline in Zillow stock to $66 a share. The way that you make money off that is by buying a put option with a 9-month duration and an $85 strike price. And just how much money did people who bought put options in Zillow in September make? How much money did I make from the put options on Zillow? I'm gonna show you guys a little later in the video. We're talking massive returns. 200%, 300%, 3x, 4x. If you were forward looking and saw that Zillow stock price was going to have a big decline like I did, you made a lot of money over the last month. But before getting into that and showing you how much money I made off this put option trade, I want to talk about where Zillow is at today. At $66 a share, laying off 25% of their workforce. What can we learn about the US housing market and other companies in the real estate technology space based on what happened to Zillow? This article is titled, "Zillow is shutting down its home buying business and laying off 25% of its employees," from November 2nd, 5 days ago. The company's iBuying division, which for everyone, iBuying is basically the buying and selling of homes that these companies do, known as Zillow Offers, hit turbulence the last several weeks, leading to a pause in operations. Now the unit will be shut down and Zillow will lay off roughly a quarter of its workforce. Here's what the CEO, Rich Barton, had to say. Are you someone who enjoys the fact that Zillow's stock price has gotten pummeled over the last week? If so, make sure to hit the like button on this video. When you do that, it gets this video out to more people, which in turn allows me to actually produce more of this content going forward. Here's what the CEO, Rich Barton, had to say. "We've determined the unpredictability in forecasting home prices far exceeds what we anticipated, and continuing to scale Zillow Offers would result in too much earnings and balance sheet volatility." So folks, there's a lot to unpack there in that quote from Zillow's CEO, Rich Barton. He's basically saying that Zillow tried to predict where home prices were going in the future, and he's acknowledging that they failed. They don't know how to predict future home prices, even with all of the data that Zillow has. Zillow has more data on the US housing market than any company in America, and it's not even close. Any home that gets listed on the market, it gets listed on Zillow. Zillow sees what the list price is. It sees how many people are looking at that home. It knows if it has an offer, if it's under contract. It knows if there's a price cut. It knows all of these things. But even knowing all of that, Zillow's CEO is saying, yeah, we didn't feel comfortable that we would know where home prices are going in the future. Now, many people across the internet, the financial press here on YouTube, especially some very big real estate YouTubers, seem to be claiming that this is purely a Zillow problem. This is not a housing market problem, some people are saying. They're saying that Zillow messed up. Right? That Zillow's algorithm wasn't great. They didn't hire the right people in the right markets, and that Zillow basically swung and missed on home buying and is now exiting, and that this has nothing to do with the U.S. housing market. Many people are saying that, and I'm here to tell you guys that those people are dead wrong. They're dead wrong. Because Zillow winding down their home buying division, laying off 25% of their workforce, and seeing a 50% decline in stock price in 1 year, 35% in 5 days, that is a huge, what's called canary in the coal mine on the US housing market. What's going on with Zillow is a massive warning sign that the US housing market is unstable. Because just think about it, folks. If Zillow's CEO, who has access to more data on the housing market than anyone else in the world, if he felt confident about the future direction of the housing market and that prices were going to continue going up, why would they do what they're doing right now? Why would they shut down their number one revenue driver? Why would they lay off 25% of their workforce if this was just simply a bug in the model? If it was a bug in the model of Zillow's home buying algorithm, they could fix it. They could hire any engineer, any mathematical quant they want to make it better. They could learn from the mistakes they made over the last couple months and improve it in the future. But that's not what Zillow's doing. They're not trying to fix this business model. They are getting rid of this business model completely because, in my opinion, they know the housing market is going into the tank, and that being a home flipper when the housing market is going to the tank is not a good position to be in. What you need to expect going forward over the next several months, over the next several quarters, is that more companies are going to be exposed as the US housing market continues to slow and continues to enter the crash stage. And the company that I think is more exposed than anyone else right now is Opendoor Technologies. Opendoor is the number one iBuyer in America. They are the number one home flipper in America. They were even flipping more homes than Zillow. And we can see here that over the last 6 months, Opendoor's stock price is actually up 33%. Opendoor is up 33% over the last 6 months, and they're actually up over the last month as well. Now, they did have a dip the day that Zillow had a dip. You can see their stock price went down by about 15%, which is something that I covered that day. However, it has since recovered some of those losses, and on the 6 months, Opendoor is in positive territory. This is kind of confusing to me because Opendoor operates the same iBuying platform that Zillow does. And for some reason, the Wall Street seems to think that Opendoor isn't going to be exposed to the same issues. The problem is they most definitely will. And what has me really concerned about Opendoor is the fact that they have actually never turned a profit from their home flipping business. And you can see that on this graph where we're looking at their last 4 years, their basically net loss figures over the last 4 years. You can see in 2018, they had a net loss of $240 million. In 2019, they had a net loss of $340 million. In 2020, they had a net loss of $287 million. And get this, folks, over the first 6 months of 2021, they had a net loss of $414 million. And so Opendoor has only lost money. That's all they've done. Even in the most buoyant housing market in US history, Opendoor is just hemorrhaging money. And as home prices continue to decline, Opendoor, in my opinion, is going to get smacked across the face. I am seeing 50% declines in their stock price as the US housing market continues. And so if you are someone who believes that, we're in a housing crash stage. And if you're someone who, looks at Zillow and sees a lot of similarities to what's going on with Opendoor, potentially you might want to buy put options on Opendoor stock right now. This is my next call, my next bet that I'm going to be making personally. Now, I know I promised you guys to show you how much money I made off my Zillow put options. I'm going to do that right now. Many of you also engaged in these put options about 6 weeks ago when I talked about the idea here on my channel. I think many of you might have similar returns. So let's take a look at this. Taking a look at my Schwab account here, and we're basically taking a look here in July. On July 6th, I opened a trade buying put options on Zillow, predicting its stock price would go down past $70 a share. I think it was around $95 a share at the time. Those options cost me $2,800. So that was basically the one-time cost and fee I had to pay to purchase the put options up front. I sold those options a couple days ago on November 4th for $9,000. So I made a net profit of $6,200, and I more than tripled my money plus 200% on this trade. My one regret is that I didn't buy more. I should have bought $20,000 of options on Zillow rather than $2,000, but what can you do? I'm still really happy with a 200% return on this put options trade. To all of you who've supported my channel, like my videos and comment and subscribe, I just want to say thank you. You are the engine that keeps me going, keeps me doing this. As I'm sure many of you know, the insights and data you get on this channel, you're getting it before anyone else. The things I talk about on this channel, typically I do it 2 to 3 months before anyone else in the mainstream is discussing it. This Zillow situation is just one example. I believe Opendoor will be the next example. And so if you appreciate the data and the insights I give you, just make sure you hit the like button on this video. That will get it out to more people. Also, make sure you're a subscriber. I'm going to come out with 3 of these data-driven videos per week. I've started doing some live streams now where I take questions from all of you live, show you data about different housing markets. Additionally, make sure to become a channel member. Hit the join button below. The cost is $5 a month, and you get some great perks, most notably a monthly newsletter with all of the data on the U.S. housing market, showing you in aggregate what I think of the U.S. housing market, and then which cities, which ones are the ones to buy, the ones to sell, underlying data like jobs, wages, home prices, permits, anything you would want as someone looking to buy a home or a real estate investor to know more about what you should do. This newsletter has it, and it is only available to channel sponsor members. So hit the join button below. If you don't see the join button, there's a link in the description of the video so you can become a channel member. All right, everyone, that's it for today. Until next time, this is Nick from Reventure Consulting signing off. Basically, Zillow comes in, pays a high price for a home, relists it for an even higher price, basically trying to make a profit on the flip, but then all of a sudden it seems like they've misjudged the market, and then they have to cut the price 4 or 5 times, all of a sudden to a level that's even below what they paid for it, which means Zillow is taking a big fat loss.